Okay, should be ready to go. Okay, welcome everybody to the Bookmap All Markets webinar. This is Bruce at Bookmap. Let me know if you can hear me and see my screen. Everything good? Okay, thank you, Stephen. Everything good? Okay, thank you. All right, so our goal here in these webinars is, if you're new, is to understand order flow and use it as an edge in your trading. And why order flow? Why? Maybe you've heard a lot about it. What is it? How can it help you? How can it provide an edge? It's a good question. So the trading from the chart over the years, there's not to get into too much of a long history here, but it's really been well, it's evolved immensely. But you can go back and look at daily charts from hand-drawn open, high, low, and close back in the Livermore time period, although a lot has changed, like it's also a lot hasn't changed. All you're really understanding is open, high, low, and close. If you look at regular candlestick chart, that's what you're seeing, with maybe all sorts of derivatives of time, price, and volume. But there's really not a whole lot more there. Now, as the markets have evolved, and transparency has evolved, and computing power has evolved, we can see individual orders. We can start to see the dome. The dome came out in the 90s, where you can see a very limited depth of market. Okay, that was your level one was best bid and offer. That was unique, and then being able to see 5 or 10 levels was unique, and that was level 2. Now we can look at all levels. Okay, full depth of market, the entire market. We can see in Bookmap, we can see not only the current market like you would in your dome or your price ladder, but we can see the history of it over time in software like Bookmap. And what that allows us to do is understand the participants in the market. Okay, in this auction process, we can understand where they're placing the orders. If they get cold feet, tepid, they pull their orders, or if they add more orders in there, and those orders get filled. So it's really starting to understand the behavior of people and traders at these levels with their orders. Okay, in the electronic market, that is the way that you interact with the market, is with your orders. All right, so it's very similar in essence to the days back in the pits, where it'd be a paper scrap or something that they would write it up on. They'd be using hand signals and yelling at each other back and forth, but you would understand their behavior, right? Basically, if you see someone jumping up and down wanting to buy, what it's going to look like in Bookmap is you're going to see a lot of limit orders stacked, and that's where on the bid they want to buy, and maybe they're even chasing price, and we'll go through it here, but there's a transition there. It's still someone wants to buy, and at what price level, and do the transactions take place, and we can start to uncover details using order flow, and that's where your edge lies. All right, so new news item here, starting April 1st, we have a new competition. This is for the Bookmap Desk, and take a photo of your workspace and upload it on social media. Here you can just take a screenshot of the QR code here to enter. The requirements, you'll mark up your take your photo, and then you'll send it to X, LinkedIn, or Instagram with the hashtag Bookmap Desk. it'll come into our feed, and yeah, there's some great prizes here. $1,000 and 1 year of Global Plus, pretty nice. And then there's a runner-up of $500 and 1 year of Global Plus. All right, so with your data, oh, and one exchange of data, and a professional photographer also will come and photo you at your workstation. All right, so submit your entries in here and jump in. Okay, so anyway, unfortunately, yesterday we had to cancel our Bookmap Academy meeting, kind of last minute. Something came up, but this is the process we go through in here, and the same thing we do in these webinars. Impetus, what's moving the market, and we know what that is geopolitical. Is this heightened environment with war in Iran, and really impacting the price of oil, which is going to impact a lot of things. Then we look at our key levels on higher time frames on whatever instrument we're trading, and we start to develop scenarios and strategies around this. So for example, if we are trending down and we see a rebound, a pullback, what are you interested in doing? Are you interested in a mean reversion trade? Or are you interested in waiting for that pullback and then looking for continuation trade? Or maybe you're looking for both, depending on the time frame that you're trading and the strategies that you are trading. But you develop scenarios, and then it comes down to the execution. Number 4, your setup, your checklist. You grade it, you determine the sizing, and you just execute. Okay, this is in the pilot program. This is what we focus on in here. We focus on all 4 parts here, but we want to develop an edge. We had a webinar yesterday, I think, and also on Tuesday, going over the pilot program. If you guys are interested, so yeah, I can show you where to sign up for that if you are interested, or the Academy. Go to bookmap.com, click on the More button. And then here's the Bookmap Academy, and here's Bruce's pilot program here. You will need to have Global Plus in order to partake in this program, but it's about building an edge. Okay, we really focus on building your edge. This is the biggest gap that I've seen between those that are doing really well and those that are not. Okay? They don't have an edge, nor do they have a process to build it. All right, we have that process in a simplified manner. Let's go through the disclosures, and then let's jump in here. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's jump in here. We'll go through our process in here, but we'll take a quick look at the order flow. And you can see the cascade down here. Since let's zoom out just a little bit more here. Okay, here is our close from yesterday. Look at this big spike to the upside right at the close there, and then this back and forth within that whole area until around 4 p.m. East Coast time here, and then we see it trending now. Okay, so now this trend I think is pretty significant. If we jump back and take a look at our candlestick charts in here, we have the daily over here, the hourly in the middle, and then on the right hand side we have the 15-minute. Okay, here's that spike we see at the close yesterday, and then we see the gap and the go to the downside here. Now this is breaking all these levels on the daily in here, so this is pretty significant. This is where a big trend is changing here. So this, I've got look back period of 1 year. Go to and let's show some more bars. Okay, and just put some perspective into this here. Yeah, so yeah, you can see the swings over here, and the swings, the back and forth in this range up in here, this really wasn't a decisive break in here. It really struggled on the way down, as you can see. And then we're starting to see more volatility with bigger swings back and forth in here over the last several days. And then here we are, breaking to lows below the daily swing here around 64.82. And where are we going? Well, we're going to be looking for more acceptance below here. Okay, we might not get it. We might, during this time, during the webinar, we typically see a reversal. I anticipate the same, but looking for these other swings down here. Okay, so we've kind of got one somewhere pretty close around here, around this maybe 48 or 30. And then 63.65 down here. There's several days that we retested, and then we found the move to the upside here. Okay, so if the market is reacting to this war and it continues on the way it is, like we're seeing traders react to it. And we'd look for lower lows into some of these areas down here. Okay, so that's the bigger picture. And let's back in here. Okay. All right. Boy, hourly gap down, 15-minute gap down. And then, this is pretty typical. We're starting to see a little bit of a bounce down here. And let's jump in and let's take a look at the order flow. And go through some of our key levels in here. Okay, this is very typical during this time of day. We see precisely this. Where are these buyers going to take it? Okay, we start to look at key levels, structural areas that we can take a look at here. All right, so let's start marking them up in Bookmap here. Okay, something like this, and the diagonal on the way down, and the horizontals in here. Okay, so somewhere here, we always look for these little areas in here where sellers pushed it through this swing here. You can see the volume picking up in here on the way down. And then, so we're just testing that area right now. And then maybe back up to where it dropped from up here. We'll take a look. We see a low volume node here pretty clearly in the, which is kind of odd. I mean, I can see it here, cut across here and here. So makes sense. We'll mark that up, that area up as well. Okay, being the low volume node. All right. And let me check and see if there's any questions at the moment. No. Okay. All right, guys. Well, you can see we're kind of dropping right back down into, after trading into high liquidity up here on the way up, a drop back down into a low volume node here. And I've been covering low volume nodes for a while, but really we're really focusing on them a lot more carefully now due to the pilot program, the release of the new low volume node or the low volume pullback. Okay, into a low volume node, which is exactly this. In fact, I don't really like it that much because there's a lot of liquidity that got transacted up in here. So we do see a break of some structure here. So I would kind of pass on that one and not looking for the continuation trade maybe yet. Right. So anyway, Any feedback on that from you guys over in the pilot program? So we have, I released two sets of files for you. One marked as simple and then one as complex. And the idea was to really just understand the elements with the simple setups. Okay, so these are more shining examples of what to look for in the setup, and then the complex ones, typically it has that same setup in there, but then there are multiple low volume pullback setups within that file because of a trending day. Okay, so and for that reason I call it complex, because a lot of those setups weren't quite as good. We want to start with the good ones, and maybe just end there with the good ones. Only take the good ones, right? We'll talk more about that in the pilot program meetings. Guys, we're going to have meetings in the afternoon. I'm not sure yet how many, but at least a couple a week for everybody to go over trades, ask questions, etc. So we'll have more details about that and more materials for you as well to support you in this pilot program and building out your edge. All right. Yeah, so for example, in this one here, you can see, like, I kind of passed on it. I didn't really like it. It didn't really pan out either. Now it might be turning into a reversal pattern in here. Okay, so if we take this trend line here, or again, it's not so much about the trend line, it's about the structure. Okay, you can see that we broke this uptrend here, but we are still within this structure here, this horizontal structure, very clearly. Brugish, you have a question. Let's see. High liquidity at 64.50, 932 contracts. Does it gravitate toward that? So that's a great question. So I think you're talking about 64.50. Let's see here. 64.50. I don't see that. Oh, you mean, okay, these ones down that are down here right now. Yeah. I mean, this is Brugesh. This is the question, right? Guys, we turn our heads for a second, and this is playing out pretty nicely. Okay, so I would be looking for, this is pretty good selling in here. We can look for maybe some low volume pullbacks into 67 here, or 68. Maybe it comes up a little bit higher here as well. Anyway, you guys know the setup criteria for it, we're looking for the strong impulse move. We got that. Okay, we did get the low volume pullback into a low volume node. Okay, we got that, and then we're looking for some of the order flow in here, like exhaustion, or absorption, or a skew in the order book. We're getting a little bit of everything. We did not get the absorption here, but we did get some exhaustion here. We did get a little bit of skew in the order book, and then you can see the sellers came in, and that's where we're looking for the entry in here, and then taking it down. Measured move. You can look at a couple of different things for this setup. Guys, I'm just kind of jumping in here and going through it live here, but just looking for this measured move, and then also talk about some of the risk management in here. So 64.60 looks like a good target. Now one of the things that we also mentioned in is to look at taking some off down here at the bottom of the range if you can, because a lot of times there'll be little pullbacks in here, but this is the first target, is down here at the bottom of the range in here, okay, to take some off, right? and reduce your risk. Okay, now your stop can be up here, and you know you're sitting pretty, okay, with some reduced risk. Anyway, yeah, see, and you'd get stopped out here. Okay, fine. No harm, no foul at all, because you took some off, and you gave this a chance to run, and didn't work. And this fit the profile here. All right. What was I going to say? Okay, about the high liquidity down here. The question about high liquidity is always about the context of, do the sellers want this down here? Do they want to go after this high liquidity, these 905 contracts down here? Yeah, I mean it's kind of it's going to be kind of a complex answer, to be honest, Brugesh, because like there's going to be a lot of back and forth in here. This is a higher time frame level. It is the figure or half figure here is 64.50, and there's more sellers than there are buyers. They are interested, it looks to me. So I would look for this to trade at some point today, and hit this area and maybe even through it. Okay, we are trending down, and it fits, right? So now we really look for the appetite though of the aggressors to go after it, right? Just the same way in here, Brugesh, to answer the same question. This high liquidity up in here, the buyers wanted it. Okay, so that's the context. Okay, and this context between these limit orders that are providing liquidity in here versus the aggressors in here. Okay, the market orders that make price move. Okay, these are the transactions we all look at over the years on candlestick charts or whatever. Doesn't matter, footprint charts, whatever. This is the aggressor volume, okay, that we're looking at. Right, so here we go again. I'm looking for these sellers to hit it pretty hard here, right down into 60. That was our original target on this, but we went for this smaller pullback here, and got a little bit maybe out of it, but and then the rest was stopped out. Okay, so now looking for the sellers to re-engage again. Looks like they want it. I would look for the continuation into this 60 and 55, which is the near the low of the day here. Okay, and then ultimately 50. Okay, just trading into 60 here right now. Guys, you'll notice, like, you know, on days like today or the last few weeks, it's pretty clear we're, for the most part, I mean, we never know because it's geopolitical, but we're going lower. And you know, the trend is lower, and we continue to look for lower lows and lower highs and trending lower. The whips back can be just devastating. They're just brutal. I mean, look at some of these moves in here, and they're really kind of out of the blue. You know, there's a lot kind of going on in here, so it's very volatile, and it seems like, oh, it's easy. This is an easy environment. It's not. If it was all that easy, we'd all be making so much money. You have to kind of put this into context as well, I think, about other traders out there. What are they doing? Who's taking the other side of the trade? Are they hedging? Is it options? Like a lot of you guys that trade the options know that the dealer has to take the other side of that and hedge it. So we have a lot of different players in here, bigger players, and we have these pretty big swings. Okay, we can go with the overall direction that we're looking for here, and then look for the order flow to support that idea. Okay, our higher time frame levels, our impetus, together with developing scenarios, and then looking for our strategies. You can even say this one in here is it's more complex, but even this is a low volume pullback up into here. I mean, basically, look at the volume in here, and this is a more complex setup. But once you start to see these sellers come back in here, you're looking for bottom of the range, and then the potential for that continuation. I know that's hindsight, but Brugish, I thought this was what you were talking about earlier, is the big transactions. Look for retests back into the big transactions, the swings, and also the nodes. Okay, and in this case, like it's really not, actually it was kind of a low volume node, but a lot of times you'll see it come right back to where these sellers engaged, and then you're going to see if buyers are going to try to get them upside down, take it against them, or are we going to see sellers re-engage here again? Okay, that's really important. I mean, you'll see it like God, you'll see it in candlesticks as well. Every time that the market comes up to an area, it gets pushed down. Comes up to an area, it gets pushed down. And what's happening in that area? Well, there's they're just adding more to their position. Okay, larger players, and or other players don't want to tangle with it, and the buyers exhaust out, and that becomes a key level. That's exactly how they become key levels. Okay, so 60 did transact. Okay, we see a little reaction off of that, a little bit of buying. Okay, I'd look for a continuation here, back down into 55, and maybe 50 here, but we'll see, right? Yeah, buyers are starting to they're starting to maybe accumulate here, but let's see if they just get crushed here. Look for selling below 60.25 here. Yeah. See how the buying, that accumulation, and then here's our order book skew, and then here's the sweep. Right, so everything is looking good in here, right around here. Okay, and yet we got a sweep back up in here, and we got a little bit of a stop run here. And this is exactly what I'm talking about in this kind of environment. Now, after that, are buyers going to support it again down here around this 61? So far, so good. You can see them in the order book. Okay, the scenario I would like to see is sellers down here around 60.5, heavy selling. Then we can get the follow through to the downside. Right. See, this is exactly what we were just talking about in terms of that buying accumulation, and then that order book skew. And then here we go again. Here are more buyers again. Okay, now let's see if they're going to try to take it back up into 69 and a quarter or 70 up here. So Brugesh, you can see that, during this webinar, we're looking at these kind of smaller areas in here and covering the same ideas that you're talking about on the higher time frames. You just want to know, is the market attracted to this down here at 64.50? That's it, right? And I'm trying to show examples on smaller time frames, how buyers are attracted to high liquidity up here in this small time frame. So it's the same idea. Yes, I think we have more sellers in here than buyers, and it's kind of across the board. You can see in here there's pockets of buying, so it's pretty back and forth, but we're trending down. Looks like there's more sellers than buyers in here to me, and I'm looking for them to make transactions with these buyers on the bid down here. Okay, so here we go again. We just traded into this high liquidity here. It did transact. And do we get more buying accumulation in here? Yeah, so far, look at that. Okay, so let's see if we can get maybe another skew in the order book. And let's see if buyers are going to support it higher. Okay, that's accumulation on the sell side. Maybe they'll get squeezed here above 63.5. Yeah, looks. Let's see if we see a little bit of an order book skew in here. Right now, the skew is up here actually at 65. Right, I'm looking on the bid in here, and I'm looking for. Let's see if we can get a bid to kind of skew the order book, and the reaction to that stronger bid be aggressive buyers. We're not getting it, as you guys can see. Okay, all right. So now maybe we're ready for the move lower here. Okay, so that accumulation was up here around 61 and a quarter. We're below it, so let's see it, sellers. Let's see them just move this market down 55 or hit our 50 right now. This is the tricky part in here, right? That accumulation that we noticed, and once these buyers in here like have got it wrong, that's where you start to see the stop runs. Okay, so this is where the stops are being triggered on the way down. Okay, it can really kind of kick off the move. Okay, now again we're just looking for continuation now. Okay, so we moved away. Okay, there's our impulse move here. Now we're looking for pullback and a continuation. Crude's at high of day. Thank you, Alois. I've got crude up here. We'll take a look here, but yeah, the correlation there is pretty strong. Yeah, we can put it on here, the correlation tracker. Careful, careful, guys. Again, accumulation here on that buy side, but let's see if they get any traction. Here's the liquidity up here at 62.5. Okay, I'm going to put that correlation tracker on here. Actually, Alois, I'm seeing it starting to drop. And that would mean kind of bullish for the equities. Let's jump over and take a look here. Oh, okay. Yeah. So there's our high at 98.30 or so. And this is basically just a pullback right now. Yeah, exactly. The correlation's pretty strong. It was funny. I called it like the S&P is like a derivative almost of the crude oil right now. You know, look, take that tongue in cheek, but like uh, you know, the idea is that you know, high price of energy is going to be the high price for anything with stocks, especially most of the stocks that use some sort of if it's I mean, it's going to affect all the markets basically. Crude is so integrated, integral to production. Okay, and the higher cost of production, inflation. I mean, everything can kind of unravel from that. Then we're talking about interest rates. We're talking about unemployment maybe starting to go up. I mean, that will take longer. You'll look at the purchasing managers purchasing less. Okay, as that's kind of a forward-looking metric. So look for these things. Really, the important part, though, is, I mean, it's all fascinating stuff, but how do we use it to filter our trades and make money is the question. Okay, with this correlation here, let's see if we can, see it going down a bit. Let's zoom out a little bit more here. Okay. Here, actually, why don't we do this? I'm going to take this, drop it here, and make crude half of the chart. take a look at S&P as half the chart. And we can also use this tool here, synchronize charts. Okay, if you click on this button now, all of your charts, all of them, will be synced. Now, if you zoom in and out from only this chart, though, it will take place in the others as well. Okay, if I zoom out or in with this chart, now that sync has been disrupted, it's over. Okay, so you have to click on it again, basically. Okay, just so you know how to use this. Let's take a look here. Okay, so all right, S&P starting to drop here. Crude starting to go up. All right, I'm not convinced on that at all on crude. Okay, there we go. All right, so there's the spike. Okay, boy, it's hard. These environments can be really kind of challenging. It's just a big dump, a big spike, and you know, is it going to be sustained or is it not? We're right back to where we dropped from here, let's see if it's sustained or not. Yeah, now we're going to get probably a squeeze and a sweep here. Guys, really, if like again, this can be a challenging environment. It seems like it'd be so easy, but it can be quite a challenge. And if you're getting chopped up in here, just take a step back. Maybe maybe don't trade. Maybe hit replay mode. Maybe go into sim. Okay, maybe test other strategies. Because some of the strategies in here in this kind of environment, there's different players acting in different ways. Right here, look, there's a squeeze, and crude has not taken place in that squeeze. That's pretty interesting. Yeah, it's not partaken in that. Okay, well, you now watch this. This is going to be really interesting to see these correlations in here. Okay, so is crude going to catch up, or is this going to collapse here and come right back down? Is this just a short squeeze here? And there's all sorts of traders that are trading these kinds of correlations in here, and they'll be looking for those correlations to either typically align, realign, but sometimes look for it to decouple, and looking for opportunities basically. Okay, so for example, in this one, what would you want to do? Would you want to go short the S&P and long crude? Maybe. And then you can beta weight that to figure out how much or try to equal the risk. Now, let's suppose you took that trade, right? You would be in profit in here because the crude has gone up. The S&P is flatlined in here, slightly going up now. All right, so and people arbitrage this kind of stuff all day long. Okay, typically not retail traders. Okay, but you can see something's not, well, now this is not a one-to-one correlation in here, but they're pretty tightly correlated, or more than normal. Okay, there goes the S&P again. Okay, and what about crude? It's just doing nothing. Let's zoom out a little bit more. Yeah, this has turned into, look at that. That's just turned into a huge squeeze. When we zoom out now, let's clear the drawings. Let's get rid of the correlation tracker in here. Just looking right at the correlation. Okay, so yeah, this is off here. Something's a little awry, right? S&P is up. S&P is up, and crude oil in this time frame is also up. Right? I would look for the S&P to collapse then off of this swing in here. This is basically a short squeeze, and this would be, now, look, guys, these are just ideas in here, and we haven't really talked about a lot of these things in here, because typically we're trying to keep it simple, looking for, very simple directional trade based off of an edge in the order flow. Here we're looking at, this is much more complex picture, and looking for this decoupling to realign at some point here. I don't know how many of you guys have a lot of you traded this before in the past. I'm just kind of curious if you have. We can do a quick poll in here. Just give me a thumbs up or a thumbs down here, or traded correlations. Alois, I'm sure not only have you done it a bunch, you're probably doing it daily, and maybe even automating it, and normally not. Okay. Yeah. I always liked it. It always made good sense to me that, like, what is the S&P? Well, compared to what? So all of these things are all kind of referential. So, like, what's the real driver here? Is it, interest rates, the cost of money, now here we go. Now this is making more sense. Crude is going up, S&P should be dropping. Okay. Now after this big spike here, this would be your mean reversion trade, and you can cover on this. It depends on how you want to trade these kind of correlations. But this is fun in sim, Mr. B. Yeah, I mean, it's like I said, it's you really have to know your correlations, because you can get really squeezed on these too. At least I have in the past, where you think like, oh wow, look, the NASDAQ and the S&P are correlated, like highly correlated. Oh, just add more in here, and all of a sudden there's some sort of news in some of the maybe the tech stocks, and the NASDAQ is totally outperforms the S&P. and you can, really take it on the chin. So you're looking for that correlation to, well, I found that you're looking for that correlation to work, and then return back to normal, and that's when you cover. When it's outside of the norm, there's an opportunity, and then when it realigns, you cover. Okay, and then look for it again. Because yeah, it can really be painful to be caught in some of those, even though, like, it takes less margin to be able to do it. Your broker will understand that, and it won't require as much margin. I don't know. I find most of the professional retail traders over the years that I've talked to, yeah, maybe they have some great strategies for directional trades, etc. But a lot of them, their bread and butter comes down to some sort of pairs trade hedging, or something like this. And they can just make money in and out all day, and it's not a lot, but like, it's consistent. Yeah, well, there's a few different ways. Another thing that I kind of like to look at, Alois, really simple. Maybe if your charting platform has this. This is just, again, this is investing.com. I've got the S&P up here, and very, very simple thing to do is just click on compare here, and add in another chart. Let's put in the NQ, right? And there it is. And you can change the line color here, or we can put in the CL as well. Okay, and we got to go change the line now. Let's CL will make this, oops, not to go here, style, and we'll make it blue. Okay, so CL is blue, and NASDAQ is purple. It's just literally like off the charts here, basically. All right, let's take CL off for a moment, and let's just look at NASDAQ. Yeah, so here you can, it's always aligned here to, when you zoom, you'll see it change it, because it starts from the 0 point here on the left. Yeah, you can see NASDAQ's leading, right, to the downside. Okay, let's turn on Crude, and let's turn off NASDAQ, and just take a quick look. Boy, it's hard. It's hard to. This is just so much bigger. If we really have to zoom in here, maybe on a 5-minute, we'll get something. Yeah. Anyway, you can put a whole bunch of things on here if you want, right? And compare, bonds or whatever it is, notes, and yeah, whatever it is that you want to take a look at. Anyway, something to consider. Brugish, actually, there's one thing I did want to mention in here before hitting the 50 down here, and I know this is hindsight, but we've talked about it many times in the past, and this, we typically look for Not exactly this kind of squeeze here, but something. Because right before getting to the figure, a lot of times, here, let's go full screen here, the S&P. You're going to get a lot of covering. You're going to get a lot of, buyers covering their positions, or, maybe getting squeezed out, maybe coming up and going above some of the swings, knocking out a bunch of stops before all coming back down and finally trading to 50. It's pretty typical. I almost always look for that behavior. And then time of day as well. Time of day is pretty good for this kind of squeeze to unfold. Guys, next week we will finally be aligned with European time and London. So right now it is an hour and a half before the London close. So they are still actively trading. And next week, though, it'll be a half hour to the London close. So they'll be kind of repositioning and getting ready to shut down for the not only the day but for the week. Does Bookmap support CME spot quoted futures? I don't know what you mean by spot quoted futures. Yeah, I mean, yes, we anything from the CME you should be able to get in here, Malik. Book skew, Luke, I'll cover that, no problem. And then let's see here. Oh, do we have a Trump tweet before? I don't know. And James, can you show the difference between TraderMap Pro and the heat map? No filter, sure. Okay. Book skew, let's answer that one. Okay. Here's a skew right here. Okay. So you got to figure. All right. So actually, let's do both here. We'll answer both questions. It'll be easier about TraderMap Pro as well. Okay, so let's decouple here, and then let's add TraderMap Pro. Okay, here's TraderMap Pro. It's on. I just need to select the right instrument. Bookmap data. There we go. And add the bot. It's the bot remover. So just so you guys know, open up your TraderMap Pro. This comes with the MBO bundle, right? And then let's just get rid of this one here as well. Click on create, select your instrument here, and then add the filter. Okay, so here's the difference with TraderMap Pro that you get compared to TraderMap Lite, which is just available for the ES, NQ, and RTY. Okay, which is free. Okay, but here's the big differences though. First off, the TraderMap Pro bot remover here will work on any market, and then there's a sensitivity slider in here. You only have a few different settings on the TraderMap Lite, and then just click play. Okay, and then it'll open up a new symbol right here, as you can see, and then this will be filtered off of that slider in the TraderMap Pro setting. And we'll come back into it in just a minute here. Okay, so you can see this longer term high liquidity up in these areas in here, and see the buying activity. Now after this pullback, here's a book skew down here. See this high liquidity that came in? Okay, what was the reaction to this high liquidity? A lot of times you'll hear traders say, oh, it's a magnet for price. Well, not really. It depends, right? If all of a sudden you see a lot of buyers come in here, there's a skew in the auction here. Just think of it like a farmer's market, that all of a sudden down here there's a lot of demand, meaning that let's suppose that a farmer's market, a tour bus shows up, all sorts of people coming out with cash in their hand, wanting to buy tomatoes, right? Well, that's similar to this here, this demand down here, and the price goes higher now because there's a supply, or there's a demand imbalance basically. Okay, now that longer term high liquidity is up in these areas up in here, and the question is, do these buyers want it? Okay, and you can see they do, so they're going after it here. So you can look for that reaction down here to this skew. Also, here's another one. Okay, short-term high liquidity, very close to current best bid and offer, right? That's the order book skew. And then what's the reaction though? And the reaction again was buyers. Okay, so you know, we know that then, wow, okay, there's a skew here from heavy demand here, and then there's heavy supply up in these areas in here, but the buyers want it. Okay, so they're going to go after it, and they just traded into it. Okay, does that make sense? This is the way that I was taught about liquidity as well. And also it was Jim Harrison, and he made me read books on this stuff and white papers and all sorts of things. You'd be amazed at the details. This was, you know, back in like 2014, and that was a you know, pretty interesting time for high frequency trading, and pretty much at its pinnacle at that time. And Bookmap was born out of that, actually. It was a reaction to that, and understanding that order book skew, and how algos would read that book skew, and they would react to it in the high frequency environment. Okay, here, and I'll show you. We can just zoom in here, and take a look at this in here. So okay, so here's some here. Now the buyers took them on, right? Okay, so let's see if we get another order book skew in here, and then let's zoom just a little bit out further. Okay, where's our high liquidity? Well, it's down here. Okay, so sellers are going for it. So I would look for sellers to continue to trade down here and hit this high liquidity. Here's our book skew right here, right? Look at, all of a sudden they came in here on the offer here. Okay, so no, they go for it. They're going for it. Okay, let's see if we exhaust out here and then come back down here. And you'll see these like kind of this flashing of liquidity in here, and then how it affects it'll affect price. And, you know, the order book builds here underneath. Okay, so this is a good foundation here. Okay, of demand. Okay, and if there's demand down here and you get these buyers coming in, then you'd look for it to trade up into higher liquidity on the offer. Okay, here, so we've got videos on this in the learning center as well. You guys want to take a look at them? I'll show where they are. Okay, and you'll see this kind of algo behavior in here. See, like this one here, and this is an algo. You can see him pulling, adding up here, pulling, adding back down here, pulling, adding down, lower and lower and lower. Finally, he's transacted there. Okay, so the buyers met the sellers here, and we got a reaction. Okay, now we're coming down. Okay, we just got a reaction here. that we were looking for that over here. Actually, we didn't get it. Okay, we got it here. Now let's see if we get it. There's our skew right there. See that little push right there underneath? Okay, and what do? We trade up into here. Now, I'm not making this stuff up. I mean, you guys, this is really critical to the pilot program as well. You'll note, and you'll note all these little interesting things in here, like this algo in here chasing after, right? Or a ignition algo. We haven't covered these things in quite a while. It's kind of hidden, or you have to kind of zoom in to see some of that microstructural algorithmic behavior in here. But it's in there, and you can see it in here. And this is the S&P. It even shows up better in thinner markets. They really stand out. Here, maybe the NASDAQ is a little bit better to give this example in here. Well, maybe we'll jump over there. S&P is more complex, absolutely. Okay, here's our order book skew here. Okay, now let's see if they skew it again underneath here. You'll watch that, and then we'll trade up to here, right? 72.75. Okay, let's see if we get it here. Now, see how, like, that's why we're looking for that skew in here. Because if we get the skew in here, maybe they pull and add higher, and then the reaction is buyers, then we're looking for it to trade here or maybe even higher. Okay, but see, because it's dark in here, we trade up into some liquidity here. We can trade right back down very easily into these areas in here. Okay, because there's no liquidity in here. It's pretty dark. Okay, here's a skew right here, and that one's pretty good. Okay, we're trading down. Here's more supply up here for a very, very brief time, and we see the market react a little bit, but then we trade lower into high liquidity, and then here we go again, and let's trade into this high liquidity here at 65. No, okay, now watch this. Now we'll probably get it rejected, and we got some buyers in here. Okay, no, sellers took them on. Okay, now we're going to look for our buyers here. Okay, there's a reaction. Okay, now we want to get back up above here and trade into 68 or 69.25 here. You see how we got to see this demand in here, and it's not. So there's our small skew right here, right? So now let's see the sellers. Let's see if that's enough of a skew. Sellers hit the bid, and then trade back down into these lower areas here. This liquidity down here. And they're pulling here too. We got another video on flip of the order book. So like here, they're on the bid, and on the bid, we trade into and through it. Now they're on the offer up here. And see if the buyers trade into them. Okay, so basically that has created a market structure through the liquidity. And it's all interrelated here. And today is not really following suit too much, to be honest. It's not really following some of that behavior. It's pretty erratic in here. We'll jump over to the NASDAQ. Let me see if I can. So that's understanding skew in the order book and understanding liquidity at a deeper level in here. This is the kind of stuff we used to cover a lot more some years ago. And I veered away from it because I think I was confusing some people. Even though it's really simple and binary stuff, it really is. And then instead, it's just like, well, understand absorption up in some of these areas, and then look for the ingressors. And it's the same idea. It's exactly the same idea here. We trade up into all this liquidity up here. Sellers come in, driving it back down, looking for high liquidity on the bid. Okay, so and we're trading into some of it right here, and it makes sense. There's a swing here as well. Okay, so that makes good sense. Now we might get down to our 50 level, Brugesh, because we traded down here. We got the squeeze. We hit high liquidity up here. We found sellers. We've rejected that area. We're back in here. Now we can look for sellers in here to try to hit it hard and trade back down into 50 here. Okay, same ideas, but on a bigger scale in here, on a much higher time frame. Okay, so let's look for those sellers in here. See how they're starting to skew the order book here and here as well on the higher time frame. Okay, so now the question is, due to this skew in the order book, are we going to get more sellers trade into? They got to trade through these guys here at 62 and 61. Okay, look at that skew. Okay, did you guys see that? Okay, buyers actually took them on here, right here. That was very, very high liquidity right here. It was, well, 210 contracts or so. Okay, but it transacted. And we can get into more details like the order book imbalance in general. Like right now, where is the imbalance? I mean, like, you know, I would actually, for order book imbalance, you'd look for it to trade back up to about this 68 level here, because where's the, you know, there's liquidity here and there's liquidity here, right? That's why I'm looking for an order book imbalance. If we can get a skew here around 68, okay, and maybe these guys pull and add down here, then we can look for the balance to come back down into like 62 or so. You'll see it, believe me. You'll see this happen. Okay, a lot of the algos are that I understand from my experience is there's our move, right? Let's see how did the order book respond to that. Let's clear our drawings here. Okay, now we got to get a skew in here because you know, right back, otherwise we're looking for it to come right back into like a 65 in here or so, 64. Okay, so I want to see order book skew here, you know, lots of liquidity, right? And then I want to see it, the new kind of medium or balance be between these two, and then market come down into like 56 or so. Okay, so you can see it starting to develop in here. See it 62 3/4. Okay, now let's see if we get enough sellers, and we're looking for our target now around 55. Again, this market is pretty volatile. It's pretty maybe we can go to see a little bit better in a smaller or example, a little bit better example in a smaller market, or something like the NQ, a little thinner. Anyway, TraderMap Pro answered the same question in here with the TraderMap Pro. If we jump over here, and you can see you're going to get more of a filter in here, and that's going to filter out that algo activity a lot better. Okay, and let me jump over here, and actually I don't like it, to be honest. I'm gonna skew it even more, so I'm gonna pause this for a second, and let's skew it a bit more here and then add it back in. And we'll come back and take a look at it. See, what it makes this challenging is the order book is constantly evolving and shifting and changing. Okay, if it does like what we were kind of looking for, then we'll see it. But you know, what if all of a sudden they really start to build up a lot of liquidity underneath here? Then it's a totally different skew. Then we look for the move back up into about 66 or maybe 70. Okay, but see the skew here on the offer, and we're getting a reaction. Guys, if that's confusing, which I can understand, and it's not helpful because you don't trade on that time frame, just zoom out to the higher time frames, and then look at the skew and use the same concepts. It really is the same stuff. Here we can draw it up, you know, up here, between here, right, and looking at kind of a medium in here. Now we're going to look for some sort of skew in here, and kind of the reaction to it is maybe press the price action down into this high liquidity here. Now, I'm not seeing it yet. In fact, we're filling some high liquidity in here, right? So I would look for more kind of back and forth just due to that, to be honest. Okay, so you'll see this in here though. See, they're starting to come in here at 70 a bit. And a lot of these algos in the higher frequency environment are seeking for mean reversion back into an order book balance. So when it's out of balance, they'll trade it back into balance. It's totally forward looking. I mean, the algos are based off of the order book almost exclusively. Anyway, let's jump over to the NQ and take a quick look. Now this is the MNQ I put in here. Okay, there's our imbalance in here. Okay, see that right there? Did you guys see that? Like now that's a pretty. This looks like some news to me, but there was something that just kind of unfolded very quickly in there. Let's zoom out here. Wow, that's okay. Back up into here. That was a 100-point move right there. Okay, but now it's pretty clear in hindsight. But we started to note this little kind of skew in here underneath. Now this is not typical reaction, but let's see, DNT, you picked it up really well in the setup for the here. I'll show it. I've got it here. The setup for the low volume pullback. And this is one of the reasons why I'm covering this in more detail here. It's a revisiting of understanding liquidity context, but setups checklist in here. This is why. Okay, so let's see. This is the trendline break accumulation. Let's import the low volume pullback. Always on top. There we go. Okay. Okay. So that's why number 3 in here. We're looking for a host of things after the low volume pullback, into or just in front of a low volume node. We're looking for these things in here: absorption, exhaustion, trap volume, and or all of these things, and liquidity skew. And you'll note this on these like a continuation pattern, that you know, the market will come into an area. You get the impulse move. You get this pullback in here, and then, you know, it goes back and forth, but not until you really see this kind of skew in here. Now this one came in a little bit later. You start to see the skew in here, and you get the reaction, right, with the buyers, and we trade higher. Okay, so anyway, you'll see what I mean. You can see it kind of underneath here as well. Right, and that little push, that reaction to that being aggressors, is what we want to look for. Okay, and we can really use liquidity to help us there. Here's a little bit of a skew right there. Buyers took them on, or sellers took them on. Let's look for it again though. Here's the skew here, right? Now they pulled. Boy, this is volatile, guys. I mean, like, usually these guys aren't. They'll stay. They're looking to kind of you know, affect the imbalance in the book. But this we got some news in here. So Alois had just reported in here something. Let's take a look. Okay, White House officials cautiously hopeful that last negotiations with Iran are making progress. That's all we know. Okay, so good for the stock markets. I mean, traders are certainly reacting to that, right? That news. Now, what do you guys think of that news? I don't think that means much to me. I mean, so basically, yeah, trade the reaction, or you can look for that as an edge. But I would not be holding long term on something like that. You know, getting out, taking your profits. So here's a good example. Like, here's the breakout up into high liquidity here. Take your profits. Here's the pullback in here. Are we really looking for this to break out again? I don't know about that. And trade up into 23,600 here. Well, let's take a look. You know, are there a lot of new buyers engaged in here? After that, the White House officials are cautiously hopeful on the latest negotiations. That is just meaningless to me. So yeah, I would look for some traders shorting that, trading it back down into some of these areas here, if that is the news. You know, so and here we go. So here's our classic kind of double top in here, and then you know, what do traders think about this? And we're getting a reaction here. Now we have gone from a full swing from order book skew and high frequency environment into right into the throat of some of the fundamental and geopolitical news trading, which is pretty much the antithesis of it, and looking for some of and coming up with strategies around key levels based off of the news or the impetus. Okay, so back up into high liquidity here. This again, like, yeah, okay, we might get the move up into it. I would be looking for squeezes. Personally, I would be looking for squeezes above these areas into high liquidity, sellers to engage, it to reject, and then trade right back down into some of these areas where it broke out from. Yeah, high volume nodes back down to like 23,500 or so. Looks pretty good to me, based off of the information uh, that I got from the news. Okay. Now, the one thing that to be careful with the news is that may make sense, but we need to see traders react to it that way. Okay, right now you can see they're still reacting to the buy side here. Okay, does this make sense? So you stay away until you see it turn into sell side. Or opposite, your buy side going along with the news until and taking some profits until you see it turn to sell side, and then you can switch as well. Okay, and the order flow, that's where the order flow will help though. Again, that's a nice big cluster of buying here. Let's go back to the S&P on this one. And let's look at some key levels. Okay, breaking out of the downtrend and on volume. Yeah, Tahobo, this news is noise against fundamentally negative view of the war, which is driving current impetus. Absolutely. So, and look, this is the thing is, what's the reaction to the news? And it's you can't be stubborn about the news. What was logical or what makes sense. You'll get really run over. If you have a certain bias on it, when are traders done trading this? When are all the yahoos hitting the buy button going, oh yeah, this is great, this is great? When is that going to dry up? When are they going to be trapped? When is the sell side going to start squeezing them? And it's not until then, and you might have to wait a long time for that to unfold. You can go with them until you wait for that to unfold. Okay, because the news can be tricky in that sense. That wow, it makes sense. It's not much news, but we need to see the reaction of the traders in the order flow. Really, otherwise, like you can really get hurt. Like you've heard the saying over and over again. Like the market can stay irrational more than you can stay solvent. So just wait. Anyway, guys, time is up. It's been an odd session. All sorts of different things covering here, and yeah, just it's kind of an odd environment to be in. Lots of high liquidity, lots of big swings, and if it doesn't make sense to you, like step aside. For some of you, I'm sure you're just in heaven. with some of these moves and just riding that momentum. And others, like, it can be kind of treacherous. Look at that algo here underneath. It's beautiful stuff. See how, look at, almost leading. See how this is kind of skewing the book here to the downside? It's kind of interesting. We got buyers that took it on though here. Okay, so really it's kind of like leading, like with a carrot here, like, come get me. I mean, does this guy really want to trade in here? No. Anyway, guys, look for more materials for that pilot program. Look for some webinars next week. We'll go into more details, answer your questions, get into that setup, and it should really complement the trendline break accumulation reversal, and look for the two to kind of go together as well. For those that are new in the program, just stick with one. Get really good at it before you move on to the other, and just become an expert, and that might even be enough right there. And then for the and just move on and become better and better at that one setup. Okay, all right. Well, thanks for coming, everybody. We'll meet up next week, and have a good weekend, and be safe. Okay, take care. Bye-bye.